Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. After a turbulent 9-month period which saw stocks and bonds lose more than 15% of their value, in recent weeks broader financial assets saw strong gains, raising hopes that the worst is behind. This is understandably also the point at which investors could ask again if markets have hit a bottom. Are we there yet? In any journey, this question can be answered with precision only if we had a navigation tool like a map or if we knew the destination very well. For financial market participants, historical performance trends function as a guide, but most of the time may not be 100% accurate because history does not repeat itself but often only rhymes. The current bear market is quite different from those of the past. In 2001 dot-com bust, the 2008 global financial crisis, and even more recently the 2020 pandemic crash, monetary and fiscal policies were eased significantly to counter the downturns, and such points of policy accommodation defined the inflection points in financial markets. However, this time is different to the past three. While the global economy is facing significant headwinds, it's not in for a sharp synchronous recession, at least on our assessment. Many sectors of the global economy are in a much stronger shape now than they were during the previous economic downturns. But a more defining feature of this cycle is what the central banks are doing. They're engaged in a tough fight against inflation by tightening their policy while fiscal policy impulse is fading after rising significantly to counter the pandemic. In fact, it can be argued that it is the central bank policy that is causing the economic stress this time around, while in the past 3 episodes, it acted as an antidote. If you feel that this act of comparing the present episode with the past 3 is not particularly helpful, you're not alone. How about describing how the market bottom would look like this time? Well, that could be useful. Let's attempt to do that now. If you believe that it is the act of the central banks that is causing economic and financial market stress, a reversal or at least a pause in monetary policy actions should cause some relief. So, what will make the central bank stop this policy tightening? It is a moderation in inflation. As we had argued several times, should inflation start to cool down rapidly, there is little incentive for the Fed and other central banks to keep rates at a very elevated level for exceptionally long, especially at a time when the growth picture is softening. So the question is, when will inflation moderate? In our view, it is already moderating. The October consumer prices data from the US has caused quite a favorable market action already. A couple of more favorable readings on US CPI are likely to firm market calculations on the trajectory of inflation. The other aspect to watch for is corporate earnings, which is likely to determine the path of equity and corporate credit markets more specifically. While it is true that earnings face downward pressure over the next quarters, we do not have the most bearish outcome on our minds. We think earnings downgrade cycle this time around is likely to be short and shallow, reflecting our assumption of an asynchronous mid-cycle slowdown rather than an outright recession for the global economy. Moreover, the historical evidence suggests that markets bottom out well ahead of the earnings bottom. In fact, in the 1974 episode, the market trough coincided with the earnings peak. We think it is not unreasonable to expect something similar this time too. Bringing all this together, we believe that markets can stay strong into the year end but encounter some volatility in the first quarter of next year, coinciding with the peak policy and earnings revisions. That should set the stage for a strong and stable second half of 2023. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. This is Kishore Muktinutalapati signing off.